Hello everyone. It is BAS time. Your bookkeeping is up to date. Your bank accounts are reconciled, and your business activity statement is almost ready to lodge. But before you hit that submit button, how do you actually know the numbers are right? Many small business owners simply trust whatever numbers their accounting software produces. But accounting software only reports the information that has been entered. It does not independently confirm whether the underlying data is accurate. Today, I want to show you the review process accountants use before lodging a BAS. It is called the triple check method, cross-checking your BAS against your profit and loss statement and your balance sheet. This process helps identify errors that a simple software check may not detect. Let's get into it. First up is the revenue check. Even though your bank accounts are fully reconciled, you still need to make sure your financial reports and your BAS are telling the same story. Open your draft BAS report. Then open your profit and loss statement for exactly the same reporting period. Look at the label G1 on your BAS. This represents your total sales. If your G1 figure includes GST on taxable sales, you will need to remove the GST component before comparing it with your profit and loss statement. This is because your profit and loss statement reports revenue excluding GST. The GST you collect is not your income. It is collected on behalf of the ATO. The resulting net sale figures should agree with the revenue shown on your profit and loss statement. If they do not match, first check whether both reports are prepared using the same accounting method. For example, if your business lodges BAS on a cash basis, but your profit and loss statement is prepared on an accrual basis, the figure may differ because transactions are recognized at different times. If the accounting method is consistent and the numbers still don't agree, investigate further. Common causes include sales transactions posted to incorrect accounts, incorrect GST tax codes, or transactions where the GST has not been applied correctly. Next, we move to the balance sheet and perform the GST liability check. This step helps confirm that the GST reported on your BAS agrees with the GST position recorded in your accounting records. Look at your draft BAS and locate the labels 1A and 1B. Label 1A represents GST on taxable sales, and label 1B represents GST credits on business purchases. The difference between these two accounts gives you the net GST payable or refundable position for the period. Now compare this amount with the GST liability account on your balance sheet as at the end of the BAS period. If the calculated GST position does not agree with your GST liability account, investigate the difference. Common causes include incorrect GST coding, manual journal entries, or unallocated payments. Catching this now saves you a massive headache later. The third and the final check is for businesses with employees. This connects your BAS, profit and loss, and balance sheet to make sure your payroll records reconciled with your accounting records. Start with label W1 on your BAS. This represents your total salary, wages, and other payments reported for pay-as-you-go withholding purposes. Compare this figure with the wages expense reported in your profit and loss statement. Next, look at the label W2, which represents the pay-as-you-go withholding amount reported. This should reconcile with the pay-as-you-go withholding liability recorded in your balance sheet. Remember that timing differences can sometimes occur. For example, payroll processed at the end of one reporting period may not be paid until the following period. So before assuming there's an error, review the timing of your payroll transactions. If these amounts still do not reconcile after considering timing differences, your payroll records and accounting ledger may not be synchronized correctly. Keeping your bookkeeping up to date and reconcile your bank accounts are important foundations of good financial management. However, a professional BAS review goes beyond simply entering transactions. It involves checking whether your BAS, profit and loss statement, and balance sheet are consistent and whether the numbers make sense together. That's the purpose of the triple check method. One simple habit I recommend is not waiting until the end of the quarter. Performing these checks monthly makes it much easier to identify and correct issues before BAS lodgement. In the next episode, we will look at how to reconcile expenses reported at the label G11 with your profit and loss statement. We will also explore some of the most common GST coding mistakes that can affect your BAS, even when your reports appear to reconcile. Getting the GST treatment right is just as important as getting the numbers to reconcile, and I will show you how accountants identify these issues before a BAS is lodged. If you found this video helpful, please give it a like, leave your questions in the comments below, and subscribe for more practical accounting tips. Remember, good accounting isn't just about recording the numbers. It's about understanding what it means. I'm Vivian Wei from Classic Business Services. Thanks for watching, and I will see you in the next one.